In today's video, you'll discover what are the 4 best REITs that you can buy right now if you want to receive a lot of passive income. But first, let's see what a REIT is. A REIT stands for a Real Estate Investment Trust, and it is basically a company in which you're investing that operate and manage different real estate properties. And it's a great way for income investors to receive a lot of dividends, since those companies must distribute about 90% of their total taxable income, which are given in the form of dividends to the different shareholders. Plus, in periods of high inflation, we often see that the REITs and the real estate itself is one of the best hedge against the inflation. And if you're looking to invest in real estate without having to put a lot of money up front, well, REITs must be one of the best options for you. So let's take a look at my picks right now. Starting with my pick number 1, which is the real estate company Prologis with the ticker PLD. Prologis is currently the world's largest real estate investment trust of its kind, with a market capitalization of over $100 billion at the moment. This business plays a massive role in the global supply chain process, where it operates about 1 billion of square feet of logistic facilities all around the world. Some of their biggest clients notably include companies such as Amazon, La Poste, FedEx, UPS, Home Depot, and PepsiCo. Over the last couple of years, we've seen that they have had some incredible growth in their total revenue, which was notably due to the exponential growth that we've seen recently with the e-commerce sector, notably during the pandemic, where everyone was staying at home and was buying on different websites such as Amazon and UPS. And since all those big businesses need to have different places to stock their different inventories, well, this kind of real estate investment trust is super interesting for you, especially with the project growth over the next couple of years in the e-commerce sector. Plus, with an occupancy rate of about 99% in the third quarter of 2022, it isn't really a big problem for this company to find great tenants for their different stores. On your part, by buying this company, you can expect to receive a great 2.50% of dividend per year. But as an investor, to understand and to evaluate different real estate investment trusts, you cannot use the same metrics as for normal stocks. For example, instead of using the classic earnings or the net income, which is represented by the revenue less the different expenses, we will use the funds from the operations, aka the FFO. Basically, those kind of real estate investment trusts has the objective to pay as less tax as possible, which means that in that case they will use what is called the depreciation to make their properties lose some value. On their side, the FFO of a certain company is basically their net income, which will be adjusted with the amortization and the depreciation, and with the loss and the gain of sales of the assets. With the FFO per share, we can basically find what is the FFO payout ratio, where you will take the FFO of the company that you divide by its total dividend. And in the case of Prologis, we can see that their FFO payout ratio is about 60%, which is showing that this dividend is quite sustainable on the long term, and it is also showing that this company should be able to eventually increase it as well. And as an investor, I'm always looking for the highest dividend, but the one that are also the best and the most sustainable on the long term. Plus, instead of using the good old price to earning ratio, now you can use the price to FFO ratio to evaluate the value of a certain company. And in the case of Prologis, we can see that at the moment it is about 25, which is showing that this company is quite fairly valued at the moment. However, over the last year, we've seen that this company has been down of about 14%, which could be a great entry point for many different investors. Now, for my second choice, I've went with the company Realty Income Corporation with the ticker O. This REIT, that currently worth slightly over $40 billion at the moment, is mainly investing in freestanding, single-tenant commercial properties in the United States, Europe, and the UK. They currently have over 11,000 commercial properties all around the world in more than 79 different sectors, all of this while keeping an excellent occupancy rate of about 99%. Despite being in a nice cyclical sector of the real estate market, where some of its tenants must lose their different business depending on the cycles of the economy, while they're still able to keep some great occupancy rate, but most importantly to pay some super high monthly dividends to their different shareholders. In fact, in my personal opinion, it is one of the greatest dividend companies of all time. An incredible fact about Realty Income is that this dividend aristocrat has been able to give some dividends for over 630 consecutive months in a row. And this distribution has been increasing over 108% 14 times since 1991. And as you see, this wouldn't be possible if they were not able to continue to increase their revenue year after year. On your side, by investing in that company, you can expect to receive a great 4.5% of monthly dividend, but with a FFO payout ratio of about 77%. We can understand that this company doesn't have as much money as Prologis to reinvest in the company to make it grow even more. Despite that, we've seen that this company hasn't lost that much value in 2022 compared to the overall market, which is showing that it's a pretty stable company itself. And with a current price to FFO ratio of about 18, this is showing that it is a pretty much undervalued company at the moment. But wait until you see my two last picks. For the next company on my list, I've picked the company American Tower with the ticker AMT. This real estate investment trust company is currently the second largest company of its type in the world with a market cap of over $100 billion at the moment. On its side, it is an operator and an owner of different broadcast and wireless communication infrastructure in many different countries. Nowadays, the cell phone towers and the data centers are some of the most important infrastructure in our economy, especially since billions of people are currently using those kind of services. In fact, with the recent rise in the last couple of decades of the different cell phones and electronic equipments, this has had a major impact on the growth of companies such as American Tower. Nowadays, this company currently holds an impressive portfolio of over 223,000 telecommunication sites in more than 25 countries all around the world. And on your part, by investing in that company, you can expect to earn some great quarterly dividends of about 3% per year. All of this while keeping a super low FFO payout ratio of only about 47% at the moment. Plus, over the last 3 years, we've seen that they've been able to increase massively their revenue while keeping a super low price to FFO ratio of only about 17%, and as being one of the world's most admired companies in 2022, I would recommend you to keep an eye on this company for the future. And finally, for my fourth and last pick, I've went with the company Equinix with the ticker EQEX. This real estate investment trust is currently the world's largest owner of data center properties with a market capitalization of over $60 billion at the moment. With the rapid rise of the cloud computing sector, Equinix has been one of the companies that have massively gained from this. Indeed, this REIT currently owns and operates a total of over 200 international business exchange data centers in more than 71 locations all around the world, notably to support and provide businesses network and cloud computing. Among some of its star tenants, you can find big names such as Microsoft Azure, Google Cloud, Amazon Web Services, and Oracle. If there was only one pick on that list on which I would need to bet that it would continue to expand over the next couple of years, it would obviously be that one. Indeed, with the past growth and the project growth of these kind of services, well, the big tech companies will continue to have a need for infrastructure to stock their data. For example, throughout the COVID-19, we saw that many different people were staying at home, meaning obviously that they were using a lot more internet, which has obviously led to a massive increase in the demand for different Equinix data services. And this has obviously helped them to make many more acquisitions in the past, notably like the new investment of about $160 million in a new data center in South Africa, which should help them to develop another kind of sector that is not developed yet, which is the emerging markets. On your part, by investing in that company, you can expect to receive a great 2% of quarterly dividends from this business. All of this while keeping a great FFO payout ratio of about 60% right now. But with a current price to FFO ratio of about 27 at the moment, we can understand that this stock is slightly less undervalued compared to the last 3 picks on my list. But despite that, we've been able to see some massive growth in their total revenue over the last 3 years. But now that you find what are the best REITs that you can buy right now, you might be wondering, hey, but Louis, what are the best Canadian REITs that I can buy right now? Well, to discover the answer to that question, check out the video that's gonna be right over here, and I will see you soon. Peace!